The recent RBA meeting surprised markets with another unexpected 25 basis point rate hike, and the divergence between the RBA and the RBNZ has just been lifting the Aussie New Zealand dollar pair now for some time. In the Australian economy, headline inflation is at 7.7% year on year, core is 6.6%. So the RBA is feeling we've got to keep hiking interest rates to try to control inflation. Now, that's been behind the reasons for the Aussie strength against the New Zealand dollar, whereas in New Zealand, the RBNZ have signalled that they believe they've completed their last interest rate hike by keeping their terminal projections aligned with current levels at their last rate meeting. And if you just take a look here at expectations for the RBA and the RBNZ, you can see that the RBNZ are expected to keep rates 5.5%, and if anything, they're going to cut rates around sort of spring next year, whereas the Reserve Bank of Australia, with interest rates at 4.1%, are still expected to potentially hike. They're meeting early in July, and there's a 41% chance of a 25 basis point hike. So although the immediate divergence, the strong divergence, has closed between the Aussie and the New Zealand dollar, you can see the bond yield spread is still pushing higher generally. There's a slight pullback now, which is allowing price to move lower. So does this mean, if you just look at, does this mean that potentially a move down to that 50% fib retracement level would find buyers? Is there a potential trade opportunity looking for a bounce from the 50% Fibonacci retracement level up to the 38% Fibonacci retracement level, so around 50 points? And that is a potential. Stops could be placed pretty tightly just underneath that 61% level fib retracement. So it is possible to have a relatively minor risk. Now, that's a technical opportunity that may still be aware that traders should be aware of, and risk can be limited pretty well. However, there are risks, as with all outlooks, and the biggest risk here would be if the interest rate expectations change between the RBA and the RBNZ, and particular if inflation readings change. That could change the monetary policy outlook for both central banks and could potentially negate this outlook.